Disney is, as ever, a real trailblazer and record setter. Although new Disney is, it's setting records in a bit of the opposite direction of the old one, having managed a record 11.7 million subscriber loss reported in the recent third quarter earnings. 11.7 million. That's impressive. That's more than twice the population of Norway. Damn. To be fair here, this record literally setting subscriber loss is not because of Disney's, as ever, somewhat contentious politics, but rather because they lost access to a major cricket league in India. Cricket, for those who are unaware, is a very weird ball game that for some reason India really, really likes. It would be the equivalent of Disney having and then losing access to Major League Baseball and the NBA simultaneously in the US. It is a hilariously massive sport over there. But that wasn't the only thing coming out of the earnings call, as, again, the majority of these subscribers is simply because Disney lost access to a service that they wanted. You know, fair enough. They did also lose a bunch of subscribers in America, however, and, they didn't lose anything there, so that probably has more to do with the politics, though they did regain the shortfall, having extended their services into Europe, as the company is now beginning to wonder how exactly to monetize these customers. With password crackdowns apparently being on the way, and Disney even says that they have a method to track how many people are sharing their passwords, even though, interestingly enough, on the earnings call, they refused to answer the question as to how many people were sharing their passwords. Something tells me that Disney might not be quite so certain after all about how many people are doing this, when, where, and how. There were also some interesting mentions about the ongoing operating losses. The losses in streaming have reduced from $1 billion to a mere $500 million, which, to be fair, is pretty, impressive, everything considered. But the company's main lifelines remains the parks, and in turn, the movie industry, which is trying to drive interest in the parks. Bob himself also mentioned that many of their recent movies had been rather severely underperforming, though he harped on about Avatar: The Way of Water for the 762nd time, because it's basically Disney's only actual success recently. And the best part is, it's got nothing to do with any of Disney's main brands. Whoopsie, but oh well, there you go. They also mentioned the Disney Star Cruiser. You remember that thing? The incredibly expensive hotel Disney was running for a little while. It sadly, what was it? It suffered from accelerated depreciation. That's very fancy talk for saying it flopped very, very hard, and it cost us $100 million. Ouchie. I guess you shouldn't have violated Star Wars quite as hard as you did. Though, to be fair, $100 million loss. Okay, I get it, because on the one hand, the Galactic Star Cruiser as an idea sounds kind of great. And if Star Wars was more of a profitable and larger brand than it is now, with more customer and fan loyalty, it might have worked out. But even then, you are asking for a very hefty price. What was it, thousands of dollars or something? Plus, of course, that doesn't include actually getting to Disneyland to stay at a hotel and not, in turn, be in the rest of Disneyland, probably the largest attraction. It was an enormously high barrier to entry, and those people with still enough passion for the franchise, all 5 of them, well, they went once, then they'd had a look at their bank account and went, never again. God damn it. Again, if this had been launched 10, 20 years ago, it might have worked out, but today, not a hope in hell. Not a hope in hell. Bob, in the earnings call, was also kind of skirting around the issue of the linear networks. He kept mentioning how well sports was doing. Oh, it's doing great. Like, our linear networks are super valuable. Oh, we love them so much. And by the way, we have received multiple offers to sell them. Oh, you just... they just arrived in the mail, I guess? You didn't ask for them or anything, they just kind of plopped on there. Alright, not sure if I believe that. He was also talking a lot about how ESPN and the sports brand needed to move towards a streaming business, direct to consumer as they called it, because, well, linear network is dead and gone. Bob pretty much outright states it here multiple times in the earnings call. The Forbes article mentioned it a little bit as well, but most of this coming directly from the earnings call that I listened to earlier today. They will also be launching a price bump for their streaming nonsense because they're hoping to monetize the subscribers yet further, which is also why they want to try and move these sports people over onto a streaming platform service so that they can, well, milk them harder as well, as the advertising market just isn't what it once was. There was also an interesting mention that they're moving into some sort of betting system in streaming and presumably the sports stuff as well. Clearly, Disney is under a lot of pressure to begin really monetizing their customer base, as so far they haven't really been able to. Despite more and more people becoming, well, weirdly dependent on streaming systems. This is one of those weird little things, isn't it? See, back in the day, the idea was that if you could provide an easy service, easy access to a thing, then people would simply sign up to the thing rather than go and, pirate stuff. Obviously, because piracy, as everyone has pointed out many, many times, is first and foremost a service problem, or at the very least, so it seemed until it seems as if now people can suck up extra costs on all kinds of programs and streaming as well, as apparently the increase in the subscriber cost had very little, if any, actual impact on the subscriber numbers of Disney, or at the very least so they claim on the earnings call, suggesting that even if the price increases, people are now so used to the convenience of having all of their entertainment in one spot that they've grown too lazy to, well, just go and fetch stuff the alternative way, which is rather interesting. I wonder if there isn't some sort of pain threshold there somewhere, though. I'm presuming Disney's strategy is going to be to get as close to that pain threshold as possible, and then back off just slowly, or alternatively, go slightly over it, depending on how much money they're owing at the moment. There was also, interestingly enough, mentions of selling Disney. Now, this was from one of the people calling in, who asked if there was any sort of consideration of selling Disney to a larger, maybe a tech company. The responder responded a little bit almost outraged, like, we haven't considered that. There's all kinds of legal questions and stuff. We would never speculate. Really now. So it's a little bit defensive, frankly. I'm thinking that due to Disney's now, they also harped on about how they totally had plenty of money. I know they had lots of stuff they could sell off, pointing towards the television companies, yet again, presumably. And they also mentioned, interestingly, there was a question about whether or not the linear networks had paid for themselves, whether they had finished depreciating properly so that all of the investments into them were no longer, worth anything, so that all of the money they'd put into these projects had actually, come back home again before any sorts of sales were considered. This, too, was a question that Disney refused to answer. Now, to be fair, there's a lot of stuff in these networks, and they might simply not have had, the answer to hand. That is entirely possible as well, as they mentioned that these investments had been going for quite some time, maybe, but you'd think that was something they might have on hand, considering Bob Iger very clearly hinted at the potential sale of these assets. They must have expected a question surrounding that, surely. There was, in fact, the majority of the questions were around the linear networks, including whether or not their new partnership would be more of a cash injection to keep them valuable, or if they were simply going to be kind of aids in bringing the networks online to benefit more from the new streaming model. Bob even went so far as to call Disney a streaming company now, which is that the right direction? See, that's the interesting question, isn't it? On the face of it, obviously you want to be a streaming company today because it offers greater convenience to people, which in turn means you get more customers. And since you can always push the limit of the payments a little bit more, and if you indeed manage to figure out some way to crack down on password sharing, etc., it is a very lucrative area, particularly when you combine subscription with advertisement revenue tiers as well as Disney does. It's potentially a fantastic income source, but that is of course only true if you've got stuff that people actually want to pay for. As right now, with 11.7 million subscribers walking out the door because they lost a sports tournament, that gives us a pretty solid indication that Disney's main core programming is just not that compelling, as all of these cricket fans were clearly there for only one single solitary reason, despite the fact that the channel that lost the cricket rights also hosted a lot of Indian entertainment, so you'd think there'd be something to watch there, but apparently not. And with Bob Iger also mentioning that the movies have not been performing particularly well, even the parks are on a little bit of a ticking time bomb here. They're on a clock. Because currently they are existing almost entirely of IPs that have already been created years and years ago. The Snow Whites, the Little Mermaids, etc. of the world, rather than what they are creating today. And even that nostalgia will at some point begin to wane English, even as the parks remain their only real lifeline. Apparently though, the cruise ships are doing well, so fingers crossed that's not another galactic star cruiser issue right there. Gods. Disney, the Titan, the undefeatable Titan, is still desperately struggling just to cut its own costs. Never mind becoming profitable. They're trying to not dig a deeper hole. And with, again, this recent subscriber loss, that's going to be a lot more difficult. Even more so as they are moving towards more aggressive monetization strategies, which you would think would begin to draw people away from Disney and into alternatives that might have a bit more of a consumer-friendly outlook. There was also a brief mention that they're going to be refocusing their entertainment as well, as apparently entertainment was not doing very well. I wonder why that could be. Could it be because The Little Black Mermaid wasn't quite the slam dunk you anticipated? Could it be because Indiana Jones was an absolute flop and a failure? Could it be because the upcoming Snow White looks like an absolute disaster? Who knows? Mystery indeed. And they are probably already beginning to realign themselves to produce, well, hopefully, content that people actually want to watch. We can hope, right? Surely? Whether or not they will be able to course correct in time, however, well, that's a big question, as if they are still losing this much money and this many subscribers, it might very well be that Disney's goose is already cooked, and what we are watching now is simply the last spasms of a dead brand. Even though, considering the amount of value inherent in the company, the spasms are probably going to continue for quite some time, giving Disney the opportunity to, do something radical, like produce a product that people actually want? What an absurd world we live in. God help us all. Hey, it would be nice to get some actually good entertainment again, wouldn't it? I keep saying that, and it keeps not happening. Oh well. Until next time, I've been Arch. Thank you all very much for watching, and I hope to see you all again soon. Have a good day.